The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 101. NASDAQ is up 10. S&P's up 2.5. Gold contract down 420 at $1,511 an ounce. We get silver down 5 cents, $17.09 an ounce. Light sweet crude flat, $55.80 a barrel. Notes and bonds. You get some nice volatility out here in the note and bond market. 10-year note down 2 ticks, 164.24. 30-year down 1 at 164.26. Now, both of those folks, the 30-year was down over a point. They just came roaring back big time. King Dollar's giving it up. You'll see how this is going to shake out. This is going to the first day we actually have volume in King Dollar. Down 129 ticks, 98.05. The euro is at 110. The yen is out here at 106.25, and the pound is out here at 121 to 1 US dollar. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, right here, outstanding show every trading day, 11 to 12 Eastern Standard Time. You want to understand option strategies, future, defined risk, all the above. Great program. If you haven't test-driven yet the Thinkorswim platform, jump over to our website at TFNN, hit that banner, bring it up. They'll allow you to trade with paper money each and every day. You can follow Kevin and his team as they go through this market. You got to love it, man. Kevin Hinks, what's going on?
Good morning, Tom. How we doing?
Retail's alive, Kevin. Retail's alive, man.
Big day, and another big day in this market. You know, these are really this retail earnings season that we're showing here is really showing winners and losers, and it's showing survivors.
Yes.
Too. You know, don't forget some firms are, you know, got a little oversold, got thrown out with the bathwater a little bit in some of these names, and you're seeing a nice little recovery in some of them. Now, they have a ways to go. But, you know, before we can really start taking a move like Nordstrom seriously, it's trading $30. That's a great day it's having today. But, you know, it was 65 a little over a year ago.
Yeah.
So we're still not getting too excited about it, but it's nice to see Nordstrom is not in the dire straits that everyone thought it was. And then, of course, Target had a big day. Lowe's had a big day yesterday. This market feels pretty good. And, you know, I thought the Fed minutes, you know, Oliver Rennick and I were talking about it, and Ben Lichtenstein and I were talking about it this morning, and this market's going through some serious divergence between the foreign markets and the United States market. And let's face it, Tom, the world is coming for our dollars, and they're coming for our bonds, right, as safe havens for everything around the world is coming for U.S. markets.
There's no doubt. You know what's so intriguing about the retails, too? Like, when you think back, whether it was last quarter or even the quarter before, like, kind of, we were talking about that. Hey, listen, man, there's some of these that are going to be alive.
Sure.
And when Tommy and I were talking, we were getting, like, I didn't do the show yesterday, but the day before that, he had said to me when we were off the air, he says, yeah, well, you know, Target can turn around, and this is before they come out with the numbers, and that they're going to be there. And you talk about being there.
I know,
oh, my God.
20%
yesterday alone. I was looking at that chart. I was in the air yesterday. As I was looking at that chart, I'm saying to myself, my God, this thing is a rocket ship.
Kevin and I did talk about
these percentages are big percentages. They're not talking, you know, you're talking about a tone change in some of these names. You know what I mean? In a lot of ways, Target was kind of left out of the discussion between Amazon and Walmart.
I know.
Right. And now you got to say they're right there.
My God, that was like, you know, Target's always had an outstanding name. There's no doubt about that. But just as you said, when you talk about an expansion of price like we just got, it's like, you know, it's a whole new dynamic, man.
I think we went from like a $42 billion company to like a $54 billion company overnight.
Right. Right. And it wasn't even like inside their numbers. It wasn't like that the internet went up exponentially. It's just that everything was fired.
Yeah.
You know what I mean?
And, you know, when you go into a Target store, you know, they are aesthetically pleasing.
Yes, they are.
Right?
agree.
They're a good, clean store.
Right.
But what I think they're doing, and what Walmart has also done, is they are adapting to the e-commerce part
Right.
of the business. And like I talked to Tommy yesterday on the air, the back of their store is getting bigger, and the front of their store is getting a little smaller because they're adapting
Right,
to the
definitely.
new world of delivery and pickup and every other way that you can sell products. And you know, these companies are lean and they're agile and they're moving to what the customer wants, and their stock is showing it, frankly.
Yeah, you know, it's so cool what you just said. So if you actually value what's happening across the country right now, warehouse space is worth a fortune.
Yes.
Okay? And so it's really intriguing what you just said, because I'm saying to myself, oh my God, that they already have the warehouse space. Now, it's granted it's not warehouse space, but guess what? The bigger that they make that back,
Sure.
they don't have
Yep.
to go out and get warehouse space.
Sure.
They
That
have that
wall
warehouse
between
space.
the main area of the store
Yeah.
and the storage and back is creeping towards
Yeah.
the middle.
All
Right.
I got to do is move a wall, man. That's
You
it.
know, exactly.
Yeah.
Move a wall, the trucks still
And what
come
you
up there,
have,
they go out.
and the other word, Tom, that's involved in this conversation is distribution.
Yes.
Yeah.
Target has all the distribution, like Walmart has the distribution, and you know who may not have it perfectly? Amazon.
Right. Well, they're going to pay for it.
Right.
That's right.
They're trying to
They're going
build
to
it
continually
still,
pay
right.
for it. Exactly.
Versus
Where-
having locations everywhere.
Yeah, and
Right.
just changing it up.
Yeah.
Right. Exactly.
Right. But I mean, it's fascinating to watch these companies make their moves and frankly adjust. Years ago, think about it. Walmart, Target, they weren't grocery stores. You didn't buy groceries there.
no.
Now you do.
Right.
Yeah.
Right.
That's another adaptation. Remember, it was always a pharmacy, and then Walmart was all the other things. But now, these are two of the bigger grocers in the country.
No doubt. And with Walmart, I'm sure it's probably right, same right around the country. I mean, they're open 24 hours a day around here.
Yeah.
Not all
Yep.
of them, but
Right,
there's
some
plenty
are.
of them within
Yeah.
a couple miles.
When it's worth it for
The
them,
one,
they are.
the closest one to my home in the suburb of Chicago is 24 hours.
Yeah. And
Yeah.
so, you know what happens there, which is really cool, I think, is that even if you don't shop at Walmart, you're going to end up getting in there because it's 24 hours. And then you get in there and you realize that, hey, man, there's some stuff that's pretty good in here.
Sure.
And it's that I can buy groceries, I can buy oil for my car,
Yep.
I can buy prescriptions, I can, it's everything in one stop. And I think people are starting to adapt to that. The numbers show it. Walmart, $130 billion in revenue over 90 days.
Pretty amazing.
That's the biggest revenue probably over year in the world.
Huge.
I'm going to get to the point. I mean, they're going to start competing on delivery time, delivery costs,
Right.
and cost of the item. So that'd be great. I mean, I would love to go from Amazon to Price Shop to Walmart to Price Shop to Target, which I don't say everybody does right now because
Right.
you can't get the same, but they're almost right there. And once they're there,
Yeah.
it's just an even competition.
It
field.
is.
Yeah.
And then, of course, tomorrow, Kevin, we got Powell with Jackson Hole.
Yep.
This market's going to be rocking and
That'll
rolling
still,
for a Friday
with
in the
everything
summer.
that's going on in this market, guys, that's still what this market is waiting for. Because if you look at some of the Fed minutes, some of the notes from the Fed minutes, he didn't mention any more rate cuts.
No.
In
In
those
fact,
Fed
they said in the minutes that's going to be the same as what they said at the beginning of the year, which means not another one, but
Yeah.
Right.
unreal.
We will see, though, right?
Yeah,
As
we
chug
will see, no doubt. Listen, folks, right here, 45 minutes from now, outstanding program. Kevin, you have a great weekend, a safe weekend, and we look forward to the show and look forward to speaking to you next Tuesday.
Thank you so much for having me on, guys.
Thanks,
you.
Kevin.
Stay right there, folks. Tommy and I
If
come
you're
right
not
back.
currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 110. We get the Nasdaq down 1. S&Ps are out here flat. Let's just go take a look at some of the higher volume equities. And yesterday, you went higher, folks, and that volume contracted once again. So you get Nordstrom. Nordstrom's up 360 this morning. You get L Brands down 165. Let's see.
Dick's Sporting Goods, right, up $1.78. Had been higher, though. Well,
And BJ's Wholesale up a 352. Let's go.
Target extending the gains, not bad to be up another % on the day after you're up almost 20%. I mean, staggering. I was talking to best friend in our office upstairs yesterday, just, conversation saying, man, Target crushed it out of the park. They're up 20% today. And 20%, it's just staggering.
It is.
Yeah.
So BJ's, let's take a look here. So it's got to pop. I mean, the bottom line this month, we just went from 20 to 26.
That's a nice monthly bar, up 30% from the low.
And what you're hearing off us more than anything, I think, in particular, folks, is that it's not the death of retail, kind of. Do you know what I mean?
No, you just better be able to adapt.
Yes. Yeah, no doubt.
And keep up with the times, for sure.
Talk about able to adapt. Let's go look at that natural gas market.
Okay, right.
That has
you
been
better be quick to adapt.
That has been a one-way market for such a long time here. It's pretty amazing, actually.
All right.
So we get natural gas numbers coming out at 10:30.
We sure do. Yesterday we got some action in oil. We had a little bit of a miss, but oil is trading. Natural gas, what are we looking at here? 5-minute bar, 5-minute bars. So we're looking at the September contract early this morning, down about 2:15. What time is that at? 7 a.m. You charge up by 10 a.m. to almost 219. Not a bad 4-penny move. We're trading at 217.66. Now the tough part right off the bat is I think these usually set themselves to every 5 pennies, as in on the 5. So it might be tough to find a contract with exposure right at 217.
Right.
But you could still maybe find a contract where you're going to have some defined risk, but you can see these are lining up at 215, right? Now, sometimes, let's use this opportunity maybe to talk about if you're bullish or if you're bearish, right? Because this actually sets up pretty nicely, in my opinion, if you're bullish, all right? Because you can lock in a spread trade. Now, this is 11 a.m. We'll jump to the others, but just short term. Your risk is defined at 215. You're getting in at 217.9. And you're basically paying the 3 ticks from 217.9 above where the market's trading at 217.6, right? So that's what you're paying. That's the premium that you're paying, and you're paying that for the ability to have defined risk down to 215. And so you're risking 29, which is or 28 right now as you reset it, or 27 as it ticks down. And it's not a bad trade if you're bullish.
For
you know?
173 on the other side.
Right. Now let's just see what kind of. So it was like 2 to 3 ticks away from the market, right, for an 11 a.m. Now that's going to go up as you go up for more time.
Sure.
So let's see where the 12 set up. Okay, 12s have a different price spread, but this is good because now you'd have that opportunity if you want to go bearish. You just go out till noon because then you have your losses capped at 220, so you choose the other side, right? You go the other way from the 5 pennies. So now you're going to be selling it on the bid, and this might even tighten up. I'm not familiar, but 6 ticks might be a little wide. I'm not sure. But 6 ticks is the bid offer spread. You're selling it, you're risking 32, and you're selling it at 216.8, and you're paying 5 ticks basically below the market, right, for premium to have that till noon.
And that's a plus for you in the aspect because the market's higher. They're allowing you to sell it under the market.
No. It's the other way. You're selling it at a lower price than you could in the market.
Yes, exactly.
So it's just premium.
Right.
You know, it goes both ways.
Right.
And let me just jump to the 230s because let's see where those line up out of coincidence. So same exact spread. So let's see where this goes. If you were going to sell, here's your noon, here's your 2 o'clock.
Yeah.
Not a bad deal when you got to pay 2 extra ticks. Now it's at 216.6 you're selling it instead of 216.8.
You're only paying $2.
Or the market's at 217.2. So even here, you're at about 6 ticks as it's ticking. 6 ticks till 230. Not a bad trade. When you look at the fact that we just went 4 pennies up and 2 pennies down.
Sure. So let me look at this on a longer basis. Let's see. So NG.
One more time. You got PG?
NG. Okay. So NG.
Nope. We got B's. B's are showing up.
NG,
there we go.
Okay. So active contract. $217. Look at this. It's just hanging at lows.
It was quite a decline yesterday from 224 all the way down to below 216.
Yeah.
Low today, almost 215.
So I see this still going low. I mean, where I'm going there is that last week that 213 hasn't got tested yet. We got down to 215.
That'd be a nice move, especially if you were on the bearish side where you know, your losses are capped to 220. You're basically already in the money. You know, you basically are buying a slightly in the money option. You're paying for intrinsic value, a lot of it, and then the premium is like 3 pennies on top of the 24 or something you're paying. Not bad.
No, not at all.
No.
Let's get over to that bond market and take a look at the bonds because these things have moved around quite a bit here. In fact, the U.S., let me go look at the 30 first. So we've gone down to 163.23. Look at that, man. The thing is moving
and
a
up to
point and a half.
165.07.
Exactly.
So right.
And
low
it
to
just
high.
popped back down again. But yeah, these bonds still want higher price, man. We take a look at the 10-year. Same type of setup. Yeah. And then King Dollar. Let's see what King Dollar is doing here. So King Dollar had a little volume in it this morning.
I heard you say that.
Yeah, it has 10,000 contracts already. Now, it hasn't done anything really. I mean, but it just has...
It's kind of like bonds almost.
It
is.
is.
It has a
higher
high, a lower low, and it's kind of right at the middle of where it opens.
Just the opposite, right?
Yeah.
Now, what King Dollar does have, look at this. You get a high volume low right here. 97,965 from this morning. So that very well can get right back down there. I wonder who's moving all those around, man. I mean, someone was just moving those around right when we were just getting on.
Yeah, 10 o'clock, there was a little action for sure.
Yeah. And we go take a look at the world because we got Jackson Hole tomorrow, so we'll see what that's going to shake out. But worldwide, bottom line is that you still have, look at this. So our 10's at 1.59.
599 sounds like a good number.
Doesn't it? It's pretty amazing.
It is.
And then, you know,
if you're thinking about refinancing out there, folks.
Oh, yeah.
It's a decent opportunity, at least to consider, depending on where you are.
There's no doubt. And the negatives are out here. Well, watch this. Like, I put this up on a 30. Oh, and yesterday, this was crazy, folks, okay? They're talking about...
The German Bund?
Yeah. And
Basil and I were talking about it.
It was amazing. They said that it was a failed auction. It was like a failed... They wanted to sell $2 billion, and they end up selling $1 billion of 30s at a negative 4 ticks. It's like, okay, what's so... You know... I get the gist of it. They wanted to sell $2 billion, but it's like you sold something and you paid nothing. They had to pay you.
Yeah.
It was the first time it ever happened in Germany.
Right,
They
right.
sell the 30.
But
And
compared to the market, I mean, that's where the yield is to be, you know. And so if you can't tell them what the yield is, that does say something. Almost as in, is the yield really there, you know, with strength? Because a lot of times you have a higher bid to cover ratio, though. You really
that's right.
do.
Oh, that's what you're supposed to have.
Yeah.
That's
So there is something there, in my opinion.
That's the deal.
It's all part of this dynamic where, what do you do with 0% interest rates, man? I believe me, right? We could go round and round for an hour saying, but they just sold $1 billion at 0%.
Right.
Saying, but they were supposed to sell $2 billion at 0%.
Exactly.
It's pretty crazy.
Exactly.
It is.
Stay right there, folks. Tommy and I are going to be coming right back with those gas numbers. We have the Dow Industrials down. No, Dow Industrials up 48, Nasdaq down 24, S&P's up 7. Get some selling pressure in this market, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trade along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So natural gas plus a build of 59 BCF. They were looking for 60, so this is going to be interesting to see what good old natural gas is doing, right?
Yeah, that's the Bloomberg survey posted right ahead of time. Looking for a rise of about 60, comes in at 59. Let's see how that's hitting the market. Natural gas, boom, little volatility. We were trading at, and so this ticked down even as we were doing that whole example, but we came into that number at about 216.7, and you pop about a penny and a half So a little bit to the upside. Nothing too muted. And again, remember, we were looking where you had either bullish exposure from 215 at 11 a.m. or you could have had bearish exposure down from 220 at noon or 2:30. And, you know, just to highlight, if you're going to be directionally biased, you got to be right in the direction. Okay,
Right.
that's the whole point of it, as in you're paying for one direction. But when you're only paying 4 to 6 ticks of 1 penny and you get a penny and a half move instantly on the number, right? That's why the premium does seem pretty affordable, because if you get the move in the direction you're anticipating and it moves 3 times the amount of premium that you're getting it into, you don't have to be right that often. Nonetheless, we'll see where that moves. You know, we're 60 seconds into the number
juice right
as it's
now.
accelerating.
Yeah.
Exactly. We'll see.
So let's go take a look at this S&P. So you get some selling in this S&P here.
Yeah, Dow is now up 3-2.
Yeah,
Count it down. 1.
Yes.
Oh, it's back to 3.
So, yeah. See, we just
definitely.
we just blew through the lows of this morning. And that's what is that? That's 5 o'clock this morning. That number is 29.18.
It was at about 5:45 a.m. for some reason. All the indices seemed like they bounced off that low.
And you get volume here. I mean, so this baby, next leg down would be the highs of that, which is 20. Look at this, 29.09. Where I'm going with that, folks, is that I'm going back to Tuesday, and then we had that downdraft on Tuesday.
Okay, right at the end of the market.
Coming into the close, yeah. So I'm going to the high of that.
Okay.
You know, because that was some selling. There was some selling. There's some big selling coming in there, and you set that up. Oh, it's going to be dangerous. Yeah, so look at this. You got over the highs. You got into the downdrafts. Yeah, I'm going to put the SPY up because it'll be a little bit clearer with the volume and everything else. So what we did with the SPY, so picture, the top of this range where ICE is really is like, with the 294.12.
Yep.
294.15.
Not bad, 3 pennies.
Yeah, we hit 293.93.
Okay.
You get over it.
What is that one, too?
And
Sorry.
that one there is...
sorry, the one just, I guess, to today, actually. Because that would be like a high, right?
293.93.
Okay.
And...
So they're all within about 25 cents.
They are.
25 cents. Not bad when you're dealing with a $293 $4, right.
And guess what?
There's obviously, that's a critical level, right?
You have sellers there.
You don't have to be a genius statistician to say if it hits it 3 times within 25 cents on, and that's talking about 294.15 to 293.90, something like right there.
Right.
Yeah, and it just rejected that for sure.
And we go into the Qs.
We just joked. I mean, the Dow's now down 25 points
this
right
is some
across
serious
the board.
selling, right? We go take the Qs. The Qs have the same setup.
Ooh.
And
you better talk quick, as we say.
They're selling them away.
South.
They're selling them away, man. The Qs just went from 189.46 to 187.
Yeah. I think the NASDAQ was down maybe 10 points when we started the show. It's now down 65.
And the IWM did the same thing. Remember something, too. The IWM is the weakest indice, folks. So it's going to be intriguing watching how this shakes out, because what the IWM has done, you know, of course, we just went down like the rest of the indices, but the IWM, you know, already went into its lows of June, of May. Well, it's May 30th, June 1st. Yes. And, you know, you had volume as the break. So that's a big heads up, because the other, and it's amazing. The Russell, the high is over a year ago.
Okay.
You know, the S&P's made new highs. The Dow made new highs.
Russell never got there.
Russell never even got close. And if we watch that, see that bond market, man, that bond market is just so consistent. I don't know how it smells it out. Do you know what I mean? It's like, you know, this morning when I was looking, so what you had with bonds out here today, folks, is that I was doing the newsletter at about 7:30, and we already had 500,000 contracts in the 10-year. I said, oh, this is some volume. Now, it's less volume than it was going into, folks, but at 7:30 in the morning, that's some heavy volume inside the bond market. You know, so I had put in the newsletter that, yeah, we have volume coming in, but yet it's still less than what you're going into. We were going into that 2.9.
Okay.
But you can see now what has happened is that you rejected it, and now it looks like these bonds are, you know, once again, going to try to get into higher price. Pretty wild, man. So
wait until tomorrow to refinance that. No, I joke.
Oh, listen, it's
amazing, man. It is. I mean, if you said we're sitting at 1.5% 10-year.
Yep.
And guess what? We might go lower.
Yeah. Yeah. You know, we take a look at the Dow Industrials, folks. You know, we're down 28. and yet you have Boeing putting 68 positive points into the Dow.
Yeah.
So you get United Health putting 31 negative, Microsoft 13, Big Mac 12. The rest of them aren't that bad, actually. But this is
just negative kind of across the board, really.
right. This is expanding, though. This is
for sure.
This is one of these deals, folks, that I mean I haven't found any real news out here. This is, I had mentioned this last week when we had come down last week so hard in the middle of the night. That's when you really got to pay attention because it's like, okay, there's not big news out here, and you have big funds selling very dramatically, and that's what you have here. This is early in the morning for this to be happening.
NASDAQ 100 down now 90 points. Yeah, you better watch out.
Yeah, so let's go NQU9.
I mean, I anticipate that some of the tech stocks, if the NASDAQ 100 is getting slammed, they're going to be getting hit as well.
That was fast.
It sure was.
Look at this.
No, right? Bye-bye.
Yeah. See ya. Don't want to be ya. And if we take a look at inside of that, you got JD.com down 4.4, C-Trip down 3.8, Baidu down 3.5, and Mercado Libre down 3. What's interesting about that, so picture this, the top three down, Chinese stocks, Mercado Libre, South America.
Yeah.
So that is kind of interesting. You get putting power into it, you get Synopsys up 4.5%. What does this stock do? Synopsys. Electronic design automation solutions for global electronic markets. The company provides design technologies to create advanced integrated circuits. Okay, electronic systems.
Chip maker.
Chip maker, yeah. Okay, so this is an all-time high. Look at this.
And
okay, so
excuse me.
there you go. They come out with numbers. Yeah.
So what was that last night? Yeah.
It's a good number, right? The estimate was 838 million. They come in with oh no, hold on. Well, I guess going forward, fourth quarter estimate was 838. Now the low end is 830. The high end is 860.
Earnings too. They see $1.10 to $1.15. They were only looking for $1. That's a 10 to 15% beat.
Yeah.
Yeah, it just seems like across the board, right?
They get some numbers there.
And I wonder if some of this stuff hitting the market. It's been a whole since we came on the air at 10 o'clock.
Right.
But stories like this coming out in following the Fed minutes. Just talking about we're on hold right now for further rate cuts. That was not the start of a planned multi-cut plan. And so maybe the market just kind of thinking about those minutes, thinking about trade concerns, of course, coming out.
So watch this, folks. This is really cool, too. Fed's Harker says he's on hold right now. He'll be on hold until the market's down 500 today.
Yeah, right.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Come right back, folks.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And we start talking notes and bonds, inverted yield, folks. One of our Tigers just gave us a heads up that we did just go negative again. If you happen to be watching Tiger TV, the way you read this graph, okay, is that a negative yield curve, when you, let's put it up as to when people are talking about it, it's the 2-year note versus the 10-year bond. No, 2-year notes, bonds. It's the 2-year versus the 10-year. And this did go negative. Right now it's positive by 3 ticks. When you're looking at it, you're going to see that 1.594, 1.593, okay? And which is really cool about this graph is that it's not negative right now. You see it, you're showing a positive, but when that did happen, you just had a negative on there.
Yeah. They're ticking around quick.
Yeah, they are. No, they are.
I think it might be negative again. This is where we'll have to pull it up because the 2 years pulling you 1.596, but the 10 years 1.594. 10 years you're supposed to get more yield.
That's correct.
For longer
Yeah, no, that's it. This is negative again.
This is ticking around weird. Maybe
right.
These aren't, but you can see. So right now it's that simple, right? We're looking at a yield of 1.596 for the 2 year.
It's inverted. Yes.
Would that be right?
And 1 point. Yeah, that's right.
Yeah.
Right now it's inverted by 1 tick.
Yes.
Even though it's saying plus.
Yes.
It's saying plus 0.3. And that, what's interesting about that? Maybe that's why that market just, I'm saying, well, there's nothing going on. What's the selling about? The quants out there, they can have computer programs running that, hey, that thing goes negative, just start selling.
Yeah, I thought you were going to actually mention, because they're talking about as well, that Fed speak and the Fed speak hitting the market and hitting the bond market.
Yes.
And it's all kind of saying, maybe the quants out there have the programs that say, wait a second, there was just an article that said Fed governor says no more cuts.
Right.
Like, sell it right now.
Right.
I know, right?
Oh my God, I'm telling you.
Yeah.
It's a brave new world out here, folks. And you better hold on for the ride. Look at the Dow. Dow's down 63, man.
Yep. Let's check back in on natural gas, see where we're trading. So it paired some of those gains, sitting 217.8. Not really a reaction to that market.
Yeah.
So we'll check back, but.
Let's go. Look at this. This Dow's accelerating. This is interesting, man. So
pick a market. It's accelerating.
Seriously,
right
look at this. So the Dow just went from 26,388 to 135.
How about almost a full % now? We're off of the high.
250 points.
It's like almost 1% off the high, right off the index. Since we almost came on the air, 9:45, 10 a.m. basically.
It's all your fault.
Oh man. Yeah.
You're not the chosen one.
Oh boy, we're gonna go there. All right.
Let's take a look at this S&P. S&P's down 20 right now, and you get volume. So the bottom line is that this thing can go lower, man. No doubt. There's no doubt there's action out here everywhere.
Let's go into. So I know Dick's had Sporty their earnings as well, and just to pull up because they spiked. All right, they're back up to 33.88, but they were at a high of 36.62. Yeah. And I just wanted to see. So let's see. Having the best day since last year. So they expect full-year earnings 3 to 345. They were looking for 320 to 340. Analysts were looking for 331. Second quarter comp sales 3.2%. That was ahead of a 1.1. I mean, that's staggering. And that number so important because you can't fudge what every store is doing, right? You know, I mean, if your stores in the same location took in this much more money, you're going to be okay in the long run. Even if you screw up something on the side, you buy a bad company, you do whatever you're doing, right? That's why revenue, bottom line, it's a big one as well. So let's see. They mention here, you know, that Dick's, I believe they moved away from gun sales after some of this stuff, not really hurting it, which is great. And so the sales up 21% the second quarter compared with
e-commerce.
E-commerce, right? I mean, Dick's has some expensive stuff. You know?
Do.
And they have expensive stuff because Nike has expensive stuff.
I know.
Because, you know, so they sell premium.
And the stores are so big.
They are so big.
I have a hard time comprehending how they can.
It's either International or West Shore. I think it's in International, one of the big malls in Tampa. They have an enormous one. I mean, it's at least 2 stories, I think. And they have everything from canoes, right, to, so they really have a lot going on in there. Not to mention they got all the good, you know, whether it's in Boston Bruins and Tampa the Lightning, they have everything. Yeah.
And per square foot, man, paying that rent.
Maybe they're getting deals at malls, though. Imagine that if you're going to buy that type of space off a mall, and, you know, they can be almost one of those anchor stores that Sears used to be, right? That you got to have.
Oh, yeah. Listen, you don't want them to leave.
No, that's
There's
what I'm
not
saying.
another Dick's out there to replace it.
No, right.
So Bitcoin kind of still hanging out here at $1,000, man.
Yeah,
10,000 bucks. Yeah, 10,000.
You know, it's remarkable that if you just go back to June 26th, not remarkable, but interesting that lower highs each time, right? 13.8, and then we get another spike. We get 13.2, and then it takes a little bit longer when we get 12.3. And then we get a high, we're at about 11, and now we're 10% off of that as well. Yeah. 10,000, that's an easy number.
No, it is. It definitely is. And you got an acceleration happening here, folks. Let me go look at the composite in general. So the NASDAQ composite, you got to remember, this is this is the strongest index, and that just gave up 4 days pretty quickly.
Can we go to like Apple and Google and take a look at some of just the FANG stocks or whatnot,
for sure.
See what's happening?
Apple's not bad.
No.
96.
And I saw news, Apple has some good news in their own right. We're talking about new products coming down the pipeline.
Google's down $9.5 bucks.
A little bit more, but still nothing too staggering. Bezos, how's Bezos doing today? Down 18, pretty marginal.
He's doing fine.
I saw Bezos had they had like a big thank you party, Prime Day celebration for their own employees. You know, a big type of deal with Katy Perry, Lil Nas, all this stuff. Yeah.
You got
he's a rock star, right?
Oh yeah, big time. You get Netflix.
Okay.
So this is going to be serious business with Netflix. This is going to start pounding this 288, and we'll see whether it breaks it. You break it, then that's going to give you another heads up. Now, see, Netflix might be one of these that give us a heads up that the S&P wants to go to this December low. You know, so 261 would be the number. That's not that far for Netflix. You know,
no,
it's 30 points, but the way Netflix trades,
Netflix they just have so many dynamics versus the regular market. As in, they got so many competitors coming on the pipeline right now. I actually just had I had mentioned that like poker, the World Series goes on over the summer. World Series poker in Vegas. They have like 60, 70 events. So there was a service you could watch. CBS All Access actually was airing a number of them. So I signed up $5.99 a month. Not bad, right? You got access to these live final tables. They showed the whole cards. Very cool for $6 a month.
Right.
In terms of the enjoyment, the
showing
value,
the whole
that you get. You know, the hours of entertainment. When a movie ticket alone costs $15 or something, right? You get this. So what happens though? World Series ended like a month ago. I forget to cancel. It hits my card like 4 days ago or something.
Okay.
And I cancel, so I'll pay for that one more month, whatever it is. But you can see how I'm signing up, I'm canceling, right?
Right.
That's a competitor, direct competitor to Netflix. Now, I might be able to have both, but all of those are coming down the pipeline right now. When HBO is there.
So we're all going to be using our calendars
Disney
a lot.
is there,
right? Yeah, on your calendar, just put it on the alarms in the calendar. Get rid of this, get rid of that,
maybe on
buy
Netflix,
this.
On Netflix, you love the show Ozark, right?
Yeah.
Well, they come out with their 3rd season, right? You sign up for a month. You binge watch it, right? You watch everything else. You sign up for 2 months, then you cancel it. You wait for the next big show or something. That's why Netflix needs those big shows. They talked about it last earnings. They didn't have any big shows to drive that subscriber.
Dow Industrials down 44, Nasdaq's up 64, S&P's up 18.5, folks. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And Tigers beat the Astros, the biggest upset in recent history. Now, this is
Major League Baseball.
Yeah, thank you. This is quite a story here. So last night you had the Houston Astros was significant favorites over the Detroit Tigers. Look at this spread, man. This is like pretty wild. So
Go ahead.
The odds makers, you could bet $560 to win $100. You know, if the Astros were going to win. But check out the other side. The other side, you bet $100 and you get $435 payday if the Tigers win. So,
and who came out on top? The Tigers.
The Tigers.
They won 2-1 over Verlander. I think they had 2 solo home runs. And we were just saying, so this is those are the biggest odds since 2005.
So
you're talking about 14 years. And it would kind of make sense because I was actually surprised they even pushed it to that level because there's enough variance, really. That's what it is. You know,
I know.
It varies from the mean. Like, yeah, they're going to crush them all the time, right? But they're still Major League Baseball players. We all know good pitchers have a few bad outings a year.
Sure.
To give somebody 5-1 odds,
right,
that team's got to win, you know, 20% of the time, at least, whatever it is. And it's interesting to see for the non-sports bettors out there, that's the spread the house is making, right? So if you're going to be a professional gambler in sports,
right,
you got to be able to be better than that spread because sometimes you're going to be the person betting 100 to win 435. Sometimes you're going to be the person betting the 560 to win 100. The house is betting 435 to win 100, and you have to close that and be better than that. But I was saying, I wonder which way when a professional gambler in Vegas sees something like this, where the odds become so skewed.
Right.
I would anticipate that usually their mind goes one way or the other, where they say, I'm going to get the 560 or I'm going to bet the. An example of this just comes to mind was Conor McGregor. Who did he fight? It's going to crush me. The boxer, and the boxer was like a 20-1 favorite.
Right.
I should know, but it seemed like the easiest wager in the world, the boxer. He ended up winning, but it was closer than you thought.
No,
Things happen.
Totally.
Yeah.
Stay right there, folks. We got Fast Market coming up next. We get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Go get him, folks.